So I'm back with another trade example of a trade that I've taken earlier today, and I just want to break it down bit by bit, time frame by time frame, why I took the trade, what my initial expectations were. Again, initial expectations are so key. You should have a part of your trading plan should be to do with what you should expect depending on the different types of trades that you're taking. It's something that I see people overlooking for more complicated things. And if you can't get the simple, basic fundamentals, foundations sorted, then you're going to struggle. You're going to struggle more than you have to, because at the end of the day, if you do the simple things well, the more complicated stuff becomes easier naturally. So this trade occurred in between the 10 to 2 p.m. 4 hour, so after the 6 to 10 close. Now, I'll just start from the daily. Previous day, bearish. Not the strongest bearish, but bearish at structure resistance. Overnight, we'd taken out the highs of the previous day. We'd also made a new high of the week as well. So if I go back to the 4 hour as well, basically, we were at structure resistance, high of last week. Last candle was bearish. My initial main kind of target was, first of all, was just basically I entered in on this candle, 10 to 11. Basically, my first kind of management point, my first profit area was essentially the lows of the 9 to 10 candle. Why was that? Well, this was a 1 hour possible break and retest area. It also was not the 4 hour support, but if price wanted to have another push up or maybe go sideways for an hour or two and not have that strong a trend, then that is where price I felt would react first. So my first kind of management point was down at these lows, and there was a kind of a quicker management point as well that I'm going to go over once I go down the time frames. But yeah, I had multiple areas. Then the next area was obviously the 4 hour support. Then this next 4 hour support, due to the way that price was nicely flowing in my direction. Now it's made obviously 1 hour break and retest. I'm just looking at this now after it's beyond my trading time, so I'm not going to be putting in the 1 hour break and retest areas until tomorrow. So I'm not putting it in just now, but obviously we have one here. And to be honest, this could be Tuesday's high, today's high could be the high of the week. So if there's not too much of a pullback, we're below the 1 hour 50 now. That was another kind of management point I was looking to see, which was also the origin of this bullish move that made the high of the day. So it was an area I was aware of. Also, basically 4 hour support, lows of the strong 4 hour bullish candle. There was a lot of confluence for me to say that price could turn around from this area. It just so happened to be that it continued going. Australian dollar was strong across the board and euro was weak. Australian dollar was one of the strongest. So it was just, it wasn't luck as such, but it was more kind of well planned execution of, right, well, I'm in this area on the daily. Previous day was this. We've taken out the highs. We're in 4 hour strong structure resistance. We have room to the downside if we want to go. Basically, let's see what happens. So that's what I did. So going down the time frames, hopefully you're taking notes. I think in every video now I'm just going to be saying hopefully you're taking notes, because there's value in these videos. You might just watch it and think, I know most of this, or it's just such a small thing, like knowing the expectation of your trade. But this is stuff that I repeat all the time to different students, to different people that I work with. And it's just something that helps me a lot, because there's a lot of people out there that are just saying every trade basically should be the same expectation, no matter where price is and structure, what the kind of trade is, stuff like that. It's just basically, well, leave the take profit open and see where it goes. And it's like, well, you should you should want to be more exact than that. You should want to have areas of concern, areas of management that is you can then set an alert, see how price reacts. I was quite, as I say, fortunate in the way that the candle closed in my direction, 10 to 11. Around the time of my entry, this was how it was looking just after the time of my entry. So we had 12 minutes to go. And I was like, well, main target of the first kind of target was still to be hit. So I was happy to see how price reacted, and then the next 1 hour was quite good for me in the sense that there was very little to no pullback to the upside once that new candle closed. Once that new candle started, the 11 till 12, which is ideal for someone that's already in the position. So going down into the 15-minute, it was a 15-minute break and retest with a strong impulse that closed beyond the 15-minute 50. We were pulling back, and I saw this rejection, the 10 to 10:15 rejection candle. So that got me interested. Now, this target is still open. I've taken most of the position off, but my stop loss is at break even now. I've just set alert around 1.5720. That probably will go off during the night, but I'm quite happy with the trade overall. That if it comes all the way back to 1.5740, those kind of areas, I'm quite happy to just see if the rest will either continue for the rest of the week or hit my stop loss at break even. So, well, just about 3 or 4 pipettes below. So, just kind of forget about the target. The target's open. It's just a round number just now, but it can still be open. So, well, this was basically the pullback. Then I saw the sellers were coming in. This has moved. So it was, I'll just show in the 1 minute. So it was a triple top in a downtrend. So what I'd seen price pushing down, created a high here, lower low, double top, lower low, came back up into here. I entered after this 1 minute bearish candle. My stop loss was above there. And yeah, that was the trade. My stop loss at the time, if I just, this is what you should be doing as well, on the 4 hour at the time was protected by the highs of the current 4 hour that had just kind of started. So my stop loss, even though it was small, it was very well protected. The 1 hour, obviously, it was above the highs of the 1 hour as well that I'd entered in on. The original expectation of the trade was in and out within an hour, basically down into these lows, which got hit. They actually got taken out in this 1 hour. I took some profit off there, moved my stop loss not quite to break even at that point, but lower down. So yeah, that was the trade. I mean, on the 5 minute, to me, what I liked was this bearish candle here, this bearish 5 minute candle. It didn't break and close beyond structure, but it showed good momentum. 5 minute 50 above price, so that's what I want for a continuation trade. My students and the people that I work with will know that that's how I use my indicators. AMAs are trending indicators, so you want to be using them in the trend. I don't really use the trend on the 4 hour as such because obviously it's a higher time frame. So I just look at immediate price action and the overall trend. But the 4 hour 50 to me as a target, yes. But as confluence for getting into a trade or not, I'm not really caring because anything can happen, especially if my expectation of the trade is in and out within an hour. The 4 hour 50 shouldn't really be that much of something to think about. So yeah, that was the 5 minute breakdown, and the 1 minute. It's just unfortunate that I have to do it this like this. So the 1 minute was essentially a deep pullback. 1 minute was deep pullback. We had the stochastic here was overbought. So to me, it's a deep pullback. Perfect example of a trade that was in the 1 minute structure, made a new low, came back to the origin of that push. There'll be a video on the origin of impulses, no matter the time frame they are, especially on the higher time frames. They are very good to spot, very good to be aware of. So yeah, that was, I waited for this candle to close bearish, and then my stop loss was well protected. So I was happy to take the trade to basically, my kind of first main target was down at the lows of the previous 1 hour, which was down in here, and you can see that we actually had a break and retest. Now looking at it, I've not really looked at it in this kind of detail since I took the trade. So there was re-entries around here, 1 minute stochastic, deep pullbacks at a higher time frame break and retest area, 1 minute impulse drop, comes back into it, drops again, and then just obviously starts to turn again. So yeah, that's the breakdown of this trade. Now to go to the targets, I'll go up a time frame. So the first management point was I had to see how price reacted at the 1 minute stochastic oversold. So the 1 minute stochastic oversold can be an area because I entered on the 1 minute overbought. I have to be aware because it's the opposite side of the range. It could cause a reaction if the momentum's not that strong. So if we look here, it basically became oversold here, which it basically did a 1 minute break and retest, made a new low, and then came back a bit, made another new low, and started to really drop. Now, to me, stochastic, again, I'll be doing a video on, if it's not already done by now, I'll link in the description, but I'll be doing a video on the indicators that I use and why I use them. Obviously, price action to me is king. It's definitely the way to go, but a lot of people can get sucked into the small movements whenever actually, as long as you've got your 1 hour, 4 hour looking good, you understand where you are in those time frames and you nail those time frames, like everything below that should just be kind of, right, well, is the momentum in the market for the direction I want to go? Is my stop loss well protected? Things like that. So let's just go to the 5 minute. So the 5 minute was basically a 5 minute break and retest, similar as well, coming into the 15 minute area, showing the rejection. I was quite happy to take it, saw this bearish candle, and yeah, we were in a sell high area on the lower time frames. Now, to get to this area, I wasn't really the best risk to reward, to be honest, but this is why I'm quite happy to take this trade, because of where we were on the 4 hour, the daily. We were at structure resistance. We weren't at the highs of the day, but we were in momentum. We were in a strong push, and the daily time frame trend is still down. We're at daily structure resistance. Previous day bearish, taking out the highs of that. So there's a lot of stuff that says to me the likelihood that price is going to go beyond. You can see that we did have a 5 minute break and retest, 1 minute deep pullback, 5 minute break and retest to continue the move. But I just didn't enter like that. I'm not really someone that scales in too much. I'm quite happy to take what the market gives me. Then to go to the next kind of area, it was actually a 15 minute break and retest as well. Looking at it now, we had a close beyond, and then we had a pull back. So very similar to, just it was closer to obviously the current low of the day and stuff. So obviously it was going to be even, and we were a couple of hours more into a bearish move on the 1 hour. So like bearish sellers candles in a row. we were getting to the kind of a maximum that I expect before a kind of decent pullback, 5 or 6. In this particular example, obviously it's not happened, but that is a rarity rather than the norm. So I would rather just go with the norm, be a bit more cautious. But there could have still been a trade, even if it was entering in here, first target being these lows, similar to a trade that I took on dollar CAD as well today in the 226 candle that I'll also be doing a video on. But yeah, this once price made this new low, my alerts went off and took some profit. And yeah, my next target was the low of the day / 4-hour support around 1.5735. Then that was hit within the next kind of half hour. I was expecting maybe an hour or two. Again, I'm always more conservative with my expectations. And then once the market gets to that area, I'll then see the alert being hit, see what's going on, and then just give price time, see how some 50-minute candles close, and then see what happens. So obviously we closed beyond, created another 15-minute break and retest, but we didn't even hit that 15-minute area to look for entries in that sense. We just dropped, which again is great for me being in the trade already, but sometimes it's not the best whenever you're seeing what the market is going to do, but you just want a slightly deeper pullback. Even whenever we're in such strong momentum like this, it can dry up quite quickly, as I'm sure you're all aware. So yeah, going into that, then the next one was the low of yesterday. So you've got the low of the 1 hour, then you've got the kind of low start of the origin of the 1 hour impulse. That was the next one. Then the low of the day and 4-hour support, which is basically the same area, which was kind of 10 pips below the previous. Then the next was the low of the previous day. Now, whenever I got into the trade to start with, I hadn't thought about the low of the previous day being a kind of target. I was just taking it hour by hour because it was a continuation trade. It wasn't a reversal. So it could have easily, whenever I'd entered in here, could have found support in this area, could have used this as a break and retest, used that, and then actually just ended up going back up close to the highs and then doing a drop like that. So I had to be aware of that. But it just so happened that wasn't the case today. But you have to be aware of your threats as well as the opportunities. So it was only once I saw that price was staying in its momentum, 1 hour close after 1 hour close in my direction. I was like, well, where's the next logical area? Let's go up a time frame. Let's go to the previous day. Let's go to the next lot. Like, it's logical. If you don't think of it as logical just now, write down a checklist. Be like, right, okay, well, continuation. If I'm looking for shorts, low of the previous 1 hour, kind of first management point, or 1 minute, 5 minute stochastic, whatever. Then 4-hour support, or 1 hour origin of a move, 4-hour origin of a move, the current low of the day if you're not beyond it already. And then, like, that's just 3-4 words that you can be like, right, okay, well, this is my target. Every time I get in a trade, maybe on a unique circumstance, there's going to be something else that I have to think about. But in general, these are the kind of areas I'm going to be looking out for. Obviously, I was looking at the 1 hour 50 as well as an afterthought because it was already in an area that I was aware of in terms of the 1 hour the 1 hour origin of an impulse move that I was already seen as a management point. It just so happened that the 1 hour 50 was in that area as well. So it just added an extra kind of confluence of why I had to be aware of that area. And just work your trades like that. I mean, now what I said I'm going to do is what I'm going to do in terms of, right, there's a 1 hour break and retest, but I'm not going to put it in now. I'll wait until tomorrow morning to do that because by that time, something could have changed or whatever, or it could be a 4-hour area anyway. There's a 4-hour break and retest that's been created. So there's no point in trying to micromanage too much. Just have your areas, set your alerts, and then if they're not hit, or if it reacts more aggressively for an area and doesn't go beyond, then you've just got to take what the market gives you. And then there's going to be times like this that you're going to get a nice trade that runs in your direction for a good few hours. I mean, apart from the first 3 hours that I've been in the trade, it's not really gone anywhere. There would have been obviously shorter term continuations because we're at the low of the day, we're at beyond the lows of the previous day, so you definitely have to be expecting shorter term trades whenever price is in that area. The thing that was good for me was we weren't at the lows of the current day or beyond the lows of the previous day whenever I entered, so it automatically gives price that option to go more. Whereas now that's not the case. Forget about the time. If price was down in here and I was looking to enter the same as how I've entered up here, and it was a different scenario, but similar as in 50-minute break and retest or whatever momentum, I would definitely be looking for a shorter term trade and less options of possibly going longer, like what this one has today. So I hope this has helped. I hope that you've taken notes. It's something that I don't try and overcomplicate things. I just keep things logical, but I know that what I seem as logical and simple to me is something that someone else hasn't quite grasped, and that's why I'm doing these YouTube videos to allow you to think like this and see this as a way to really trade, even if you don't take my course or work with me in a call or intensive weekend or whatever. There's going to be information about that coming out, but it's not as if it's necessary to get involved in that. It just speeds things up. It allows you to have more time with me personally and speak about things. I'm not here to just do it in a numbers kind of side of thinking. I want to really help everyone that I work with, as long as they're willing to do the work and ask me questions that aren't the same questions all the time. That's my pet hate, is asking the same question over and over again. It's not always the person's fault. Sometimes they don't take notes, or sometimes it doesn't go in. I don't mind 2 or 3 times, but if it starts getting 5 times plus that you're asking the same question, you're just stopping your own development. You're never going to get to that next area of queries. Like, most of my journey has been on my own, that I've not really had someone that's been on the same wavelength as me to ask these questions, or is trading in a way that I want to trade, that then I can ask the questions. I've had to think about it myself and just cut down the different, like trading into different parts, and then just try and optimize each part. And that's obviously how I came in with trade management and expectations, etc., because it's an optimization of how I did things before. And I feel that it's a big thing to know what kind of trade you're getting into, what expectations of the trade, and beyond that is a bonus. Yes, they will happen due to, like for example, with this, due to where I was on the 4 hour and the daily. I was at structure. The previous 4 hour close was nice. The previous day was nice. There was room to go to the low of the day and beyond. So it just so happened that I was looking at other pairs as well for other trades, like Euro New Zealand, that dropped really nicely as well, but Euro New Zealand was closer to 4 hour support. Euro Aussie was at 4 hour resistance, or just reacting off of it basically. And that's all the real difference is just focusing in on the right stuff at the right time, which should become second nature. But if it's not, just have a checklist. Like, create your trading into different compartments: trade management, stop loss placement, take profit areas to be aware of. It's, as I say, I'll do a video on that side of things as well, but it's not, don't make it more difficult than what it has to be for yourself. That's all I'm saying. Try and optimize things so as much of your trading as possible becomes mechanical. Anyway, I hope you've enjoyed this video. If you've listened and it's 25 minutes now, fair play to you, and I hope just subscribe, hit the bell so you get notified whenever I make a new video, and like the video if you feel as if it's helped you, because it might get in front of other people that it could help as well.